Hi, Warriors. People are getting nervous in Japan. How's everyone doing today? Michael, hi. How are you? Bran, yes, I watch the whole universe. And who else is around today? So some unfinished business taken care of in US dollar yen. I'll show you in a moment. How you doing, Ryan? Glenn? Sinatra? AJ? Marcus? Everyone's all okay. Yeah, Bran. Everything's a cycle, right? Ask your girlfriend. All right. So some unfinished business taken care of in the end today. If you guys could see it. We took out the October 22 high by 3 pips. Now lower on the day. See that? 25% correction. That'd be pretty big. All right. So, you don't know if you have a top till you look back in your rearview mirror. But, they took care of these bears and now they took care of these bears and they're making big noises. So I'll tell you what I'm going to do. If the opportunity arises, I will sell a rally in US dollar yen up around 51.50 and give the high maybe 20 pips tolerance. That's what I'm going to try should we get a pop here. So let me go
Dale,
to the team.
you should probably have Ryan come in and explain to you and everybody that's just waking up the reason we're seeing a lot of these moves, which is important because the big spike lower that we saw in Europe, there's a reason behind that. And Ryan explained it in the ForexAnalytix chat room. Well, you were probably sleeping and I was. So I think it is very interesting whys we're getting these moves.
Okay.
Yeah, you lot
it's
sleep.
also kind of important to know how to trade it.
Yeah.
Okay. Go ahead, Ryan.
Yeah. While you lot were counting sheep,
Yeah.
The officials over there were getting up to all sorts. Yeah. So we had the test of 152, made a new high, 151.97. Still reinforcing that there's something up there. I don't know if it's barriers. I don't know if it's official, unofficial level playing. But there is something going on up there, as we well know.
So you think it's more than jawboning?
Not the jawbone. Well, not the jawboning. The press did that thing today. So there was a headline dropped on Reuters that the BOJ, MOF, and the F.A.C.E, their securities regulator thing, were having a trilateral meeting. All big flashing red headlines all over the place. They have these meetings twice a year. It's a bit like when there's something going on at the Fed and they
like
post...
Humphrey Hawkins' day used to be.
No, it's like, when we were coming through the crisis and they were posted about those extraordinary expedited Fed meetings and everyone started panicking because, what's this extraordinary meeting they're having? And it's a regular meeting they have. So it's similar with these BOJ and FSA meetings. They have them twice a year. They can call them when they want. So the market all started buying the yen. Something big's going to come from this. It's an emergency meeting. It's not an emergency meeting. But then we got Kanda in a press conference at the end of it.
Ryan, can I just add in there? It is the first meeting that these three organizations have had since May of last year. That I'm just pointing that out.
Yeah, they have 2 a year, but they can hold more if they want. And then if you look in the chat room, I posted the meeting that they had in June last year and what it's all about. So these things are biannual. So they have these meetings when they can call them when they want, but they do have them. As do most countries, they all meet up. Yellen meets with Powell and so on and so forth. Anyway, Kanda came out afterwards and he started off saying the same old jawboning lines that we already knew. The only real change that he did make in rhetoric was saying that he is seeing speculative moves. That's a bit of a step up from saying we won't tolerate speculative moves. That gives the sense that everything they see now in FX is of a speculative nature. And he did sound a bit more forceful on the rhetoric than he has of late. So that's the reason why we're seeing yen pairs lower. I do think we are closer to intervention at the moment. We're still lacking the volatility. So we're not seeing yen pairs moving in 200-300 clips each session or anything like that. That's probably the final line in the sand for them.
Maybe he knows that if we start closing up here above these highs, that it measures like 164, and it's better to deal with it now before this breakout would take place.
Yeah, well, they're trying to deal with it now with the constant daily, every cabinet member, finance minister, government politician coming out and talking about the yen. So that we are at, very high intervention levels, elevation in threat, shall we say, threat levels. There's two ways of doing it. They can keep talking and the market isn't going to go far away from it, or they can smack it now and send the market a message, or they let it break and then they smack it. I still don't know. I still think that maybe they're officially defending the level at 152.
Is the Fed going to give them a hand?
Not on purpose. The Fed aren't going to help them on purpose.
You know, everything the Fed does is an accident.
Well, if the Fed suddenly turn around and say we're cutting in May or cutting at the next meeting, whenever it is, then that's going to catch the market on the hop and dollar gets sold and dollar yen gets sold and it does the job. But the Fed aren't going to do that just to help out the Bank of Japan.
They won't help. They won't participate in an intervention.
They won't necessarily participate in an intervention, but regional or the regional offices of Japanese banks can. So they can intervene in any time zone. They can. The MOF can tell the BOJ to push the button, then they can phone up banks in London and say, do the job, or the Japanese banks can phone up their London branches and say, do the job. So when it's talking about global intervention, you won't get necessarily the Fed jumping in and doing stuff. They have on occasion been asked to, sell certain currencies or take up certain currencies. So it is possible. But it's a tough one here. I've been saying in the room, I'd love to trade this 152. It's just too much risk for me at the moment. I'm long a bit 151.12 just on the fading that headline that we got, and I've taken some off. I've moved my stop back up. So I'm trying to lock in as much profit as possible. If we see your 150, I'm going to be chucking out pretty much all the trade. So can you wait for me to get out before you get short, please, Dale?
Well, and that's the thing.
I'll go long to push it up there for you.
Well, and that's the thing, Ryan. And this is like, so Dale, when you said earlier, you got to learn, you got to know how to trade it. Like, for example, last night we were trading at 151.75, and it felt like, when I went to bed and it was like 9:00 p.m. Pacific time last night, I went to bed. I'm like, man, it feels like they're going to blow right through this 152 level. And, I have orders above 152 to get short. And I'm like, okay, but I already have yen trades on the short side. Like I'm currently short Swiss yen for the last 3 weeks. I'm up 348 pips as I'm staring at my P&L right now. And it's been a trade I've been running for the last 3 weeks, really from almost the top tick. But I didn't want to be too exposed, so I cut my euro yen short, which was, it was profitable. It was like up like 40 pips or something. But I cut it because what happens is if we broke 152 and they didn't have these headlines that Ryan's talking about, we could trade to 153 to 154, like literally in a blink of an eye. So if you get caught on the short side, I'm like,
you have a stop over the high, you're gone.
Right, but when you're trading non-yen, not the dollar yen, you're trading the euro yen
Oh,
or the Canadian yen or the Swiss yen or the Aussie yen or whatever you might be trading. You can gauge the dollar yen and where the stops are going to be, but you don't know how that's going to relate to the cross markets. So I didn't
Yeah.
want to be stuck in any cross currents in the other yen pairs should the dollar yen, I wanted to reduce my risk basically because I was kind of hoping I'd wake up and we would have seen 153. That's what I was really hoping for, even though it would have not affected my P&L well, but that would have set up some greater opportunities. But it's a tricky level around this 152 level. It's really, really tricky. And you could literally
That's the thing.
while you're not in front of your computer, you could look around and be, higher or lower 100, 200 pips pretty
Uh,
quickly. Wouldn't you say,
Yeah,
Ryan?
that's the thing. We have to be risk managers. Okay, so any other pair, I'll be piling in with buy stops above 152. Okay, but I don't want to get long on a break at 152.20, and then 2 minutes later, the MOF come in and intervene, and the next price is 150, 149. Because my stop, if I have a stop at 151.80, that's not going to get filled at that level. It's going to get filled at whatever the first price is. So that's more risk than I'm prepared to put into a trade. On the other side, if you're short and it breaks, like you say, it could be 153, 154 in a flash, and then you're stopped out, or again you might get a little gap, and you're stopped out at a worse price. So it's all about the risk, and it's too high a risk for me to get in the water in this one. And I don't care
well,
if I
then what they're
miss out.
saying, if this is how you're thinking, and you have great insights, there are a lot of other people with great insights, so they're actually starting to get the job done
Yeah,
because they're intimidating people because it's too high risk at this point.
yeah.
So they're staying away.
I would say that's 100% correct, Dale. The BOJ and Ryan, I'm sure you'll probably chuck in your opinion here. The BOJ and the Ministry of Finance, they are very, very good. They have a very good understanding of the markets, how they operate, where traders are at positioning. They make a lot of calls. They understand exactly where the market's at and how to play them like a fiddle. So when you're talking about like 152 being a key resistance, just go look at the 6J. The 6J shows you that there are stops below, or you could say above 152 in the dollar yen, but you could say below the 6J. If you look at the contract,
The
there's
futures,
many stops below there, and they're very key. They know to press the gas on an intervention on any break lower in the yen because it's going to just get everybody out, clear the positioning out, and go the other direction. But they understand those concepts. They're not
Yeah.
ignorant to that. Like a
I'm
lot
long a
of
little
central
bit, and
banks are.
I'm scared sitting here with this long position because I think the intervention risk is really high.
Yeah.
So that's why I want 150, 150. Then my job's done. I've made some pips, and I'll move to the sidelines. And that's the first job. It's not just about getting traders to go the other way. It's about pulling out the traders, like Dale said. Not me, the big traders who can move
you're big,
markets.
man.
Only in size, only in weight.
And that's
It's putting that
I've
liquidity
got it.
out.
Oh, sorry,
Grab
Ryan,
the
I didn't mean to
charts.
talk over you.
Grab the charts, bro.
Well, I wanted to say that, and we just had the Ricks Bank. I just had Ryan just mention, not Ryan from ForexAnalytix, Ryan in our comments mentioned about the Ricks Bank. We're just about ready to clear the 200 DMA. We're clearing some resistance. Now remember, these Nordic central banks have been fairly dovish. So Ryan, I want to hear your commentary on the US dollar Swedish krona. But before I do that, I'm just going to go into the ForexAnalytix chat room. And when you talk about, like, this is the trades room, you guys can see, like running positions that I have and which ones I closed out and why I closed them out. And Ryan jumps in and talks about why he's buying the yen, cutting the yen, what levels he's playing off of, because we talk about how to trade this environment. And that's the key. when you're trading in you know, a market around intervention levels, understanding how to do it and why we're doing it is super important. That's why the Forex analytics community is really valuable, because yes, you could be in the trades room, but you can also be in the general chat room and go back and read Ryan's commentary, like from this morning. Well, that's my commentary. Let me go back to these comments. Wait, no, not those comments. I'm sorry. I gotta go farther up in the morning. Where he was talking about, he's talking about, you know, the Ministry of Finance, or excuse me, the BOJ, and how they meet, and that Bloomberg's just making you know, highlighting normal meetings, where he wanted to play off the 151 level on the long side, which you did, Ryan, which, you know, I commend you. These are things that you don't, that you'll get in our community when you're inside of it. And I think it's some great insights there, Ryan. So
Yeah, thanks, mate. And we do it live. You know, the trade room is not just about us telling what trades we're doing. So, you know, everyone goes, yeah, great. It's to give traders
it's as they're
understanding
happening.
why am I
And
trading
why?
that, and how am I trading that? You know, I said when those headlines were dropping, if we get close to 151, I'm going to start fading, and I picked it up at 151.12. But
Right.
I'm going to be quick on getting out some profit if it bounces, and that I did. And so it's about understanding why a trader's trading, you know, because that's the important part. That's what we try and teach every day in the chat room. Don't just follow a trade. Don't just listen to a trade. Why is that trader trading it? And that's what you learn from, hopefully.
Yeah. Speaking of which, Dale, I'm sure you got some comments here regarding, and I know I saw you looking at it before I took the charts from you. But Ryan, can you gather your thoughts about the RIX Bank? I'm going to come back to you here in a second. Silver sitting on the 38% retracement. It has really been underperforming gold, and gold obviously continues to, you know, try to push up against this 2200 level. It's doing a good job of holding a bid. I mean, gold sure is, but silver not so good. How do you feel about silver at this point? Do you think it's going to play catch up with gold, or do you think you've got to look at it as a metals proxy short if gold ever starts to see some profit taking? How are you going to approach this
Well,
one?
I think the
Speaking of
gold
how you're
silver
going to trade it.
ratio, if the gold silver ratio, if you pull it up, I think we're going to make a marginal new high there, maybe towards 92, which means silver will continue to underperform during that time period. As far as it looks like we'll challenge those highs. And silver, I've been talking 2350 to 2320 as a buy point for, I don't know, a few
So
weeks now.
basically, you'd get long at like this confluence of the 50 DMA and the 200 DMA. It makes sense. I mean, you know, we're in my opinion, we're in a big triangle, and we're smack dab in the middle of this very big triangle formation
We're going
consolidation
to break
period.
out. Last bus stop, in my opinion, down
Yeah,
there.
I mean, it looks like it's going to break out, and you would think that silver would break out following gold at some point. You would think. I mean,
Gold,
I
I
would think
still
that.
think could pull back if you put the gold chart up like a 4 hour. I can't rule out one more high. What's that? The daily?
This
Is
is
that
a
a
4 hour.
4 hour?
Oh no,
Okay.
I'm sorry. This is a 4 hour. There you go.
Okay. You see how you have two drives here?
Yep.
That we could go for one more high. But I think if you're patient and wait for 2000 to 1970, you're going to have a chance to buy it down there.
All right. Well, you know, it's gonna be an interesting one, because like I said, I think there's like a lot of push pull in this market. And every time I think gold, you know, okay, maybe we're gonna break back below this 2140. And like yesterday, we had this, you know, move up to 2200. We updated our community that we're at the 618. It reversed, gave back all the gains. And then I figured we were gonna wake up this morning and see it a little weaker. It wasn't, and it continues to hold up pretty well.
Well, I
I
think
want
even
to
Greg
talk.
has said new highs, he wouldn't get real bullish. So there's something, if we go and make a new high, you'll have a three drive, Gregor Horvat not being impressed, even if gold makes a new high. That's what he said when he was here yesterday. So,
Well, you know,
uh,
here's his daily his daily Elliott wave
Okay.
count. So what he is looking for is a new high and then a reversal. So
Okay.
yeah,
Sounds familiar.
yep, there you go. You can, yeah, and again, you can find that inside of ForexAnalytix, just in the Elliott wave tabs. Real quick, I want to talk about currency since we only have a few minutes. Australian CPI really weak. The market. I actually read a headline from, I forget what freaking bank, like maybe Goldman, or I forget who. Maybe it was Lehman Brothers. Just kidding. I know they don't exist anymore. But somebody had put out a research note that Australia's. This is obviously a couple hours before CPI came out. Australia is, on pace to blow out, upside expectations for year over year for CPI, and then they missed. A couple hours later. Aussie really has come under pressure. I think a lot of people are believing that, this resurgence of inflation, or, stabilization of inflation is a global phenomenon. I beg to differ. We talk a lot about it during the Morning Edge and the Daily Roundup, our private shows for ForexAnalytix subscribers, that, the China and Pacific, region and world is much different than the Western economies, in my opinion. And so we continue to see disinflationary pressures in China, Australia, New Zealand, and you have, inflationary pressures that are persistent in, the West, and here in the US and in the UK, and more so than others. So I think the risk now is the Aussie, we start breaking below 65 cents. It's going to open up. Dale, I know you've always talked about 63 cents. I think that's a very distinct possibility. And if
Yeah.
you think about this, like, I'm going to draw it out for you just without messing up my charts.
Oh, look at that big head and shoulders formation there.
Or it's, big
Look
flag
at.
pattern, it's,
Oh yeah.
yeah, it's this is also, whoops, didn't mean to do
We could
that.
be carving out a right shoulder here.
We could be, this could be a right shoulder, head, something that looks like that. I mean, there's all sorts of reasons for, if you're long Aussie dollars, to be very careful. And
Yeah.
you match it up to copper, looks like crap. You match it up to the S&P, looks like crap. You match it up to Chinese stocks, oh hell, it almost looks pretty much the same, right?
If it turns
So,
from 63 or so, um, I think you could stay long Aussie for a couple of years. It's going to be a Ryan trade, a a
I
lifestyle
like to
trade.
believe that these generational lows right here, these
Yeah.
are levels that aren't going to get hit again,
No.
in
No.
the next 20 years. Generations, you
Yeah.
can classify that as about a 20-year time span.
Talking about my generation.
There you go. um, but I don't know. I start to question these. You go to like the US dollar, Norwegian krona. I'm like, yeah, there's no way we're going to test this again. But at the same time, you look at how bid like the dollar Norwegian krona is, or the Aussie US dollar, how heavy it's trading. And this is in this environment. I mean, if we start to actually see stocks weaken, I heaven forbid what happens to the Aussie dollar. I don't know. I mean, I hear what you're saying, and I do think that commodities are going to act well over time, but man, I don't know about commodity currencies and countries, especially, again, disinflationary pressures that we see in China. It's no joke, and I think that the Aussie is following, you know, what you're seeing here. I mean, you look at Chinese equities. I mean, we're at levels that, we haven't seen since, long. I mean, the Chinese equity markets haven't gone anywhere in a long time.
You
So
don't you have the same problem with the yuan? They keep trying to push US dollar yuan down, and they smacked it, and now it's recovered.
yeah, and this is one of those other things that, and Ryan plays this a lot more than the rest of us. I think it's, due to his brokers, allows him to trade it. So I don't trade the yuan as much as a lot of
He's got a
Europeans.
lifestyle account. What broker wouldn't let him do anything?
Yeah, exactly. The thing
I love
about
that.
the CNH, and the thing I worry the most about, is that it is a lever that China can pull, and if they need to weaken the yuan and let it really weaken, to bolster Chinese growth. They can,
Exports. Yeah.
yeah, and they might. I mean, in this environment, when you get into an environment where, which we aren't in right now, but if you see a more of a global recessionary period come, that could be a risk.
They pissed a lot of money on trying to keep it from doing this. Their reserves are way down, aren't they, Brian?
They've got enough. They've got enough. Don't worry about that.
They do? Okay. I'll
Biggest
give them my
central bank in
bank
the
order
world.
numbers.
Hey,
All right.
hey,
Yeah.
Ryan, I'm sorry. I've just realized we have a few minutes. We have a couple things. Rick's Bank, they just met, but also we have Waller speaking later today, which is a big deal because everybody's looking for cues from Waller today. What are your thoughts going into? Well, first of all, what are your thoughts about Rick's Bank? Second question. How about Waller? Any ideas there? Because I'll give you my peace of mind.
Yeah, well, the Riksbank, the only real difference in the meeting, they're still touting May, June as a potential cut time. Or Thieden came out, though, and said that May is a 50-50 chance of a cut. So it's sort of cemented May a bit in the market's view, meaning an earlier cut than some of the other banks as well. So that's on the Riksbank side, while you're seeing the Swedish a little bit softer.
Yeah.
As for Waller, yeah, a lot of people, a lot of banks have picked up this speech because he has had a habit, being who he is, of being a bit more market move. Is he the vice chair?
Well,
Is he the vice chair?
no, I don't think he's vice chair. Let me Waller, hold on. He is, but the reason why it's such a big deal is he's the one that did the dovish pivot back in November. So he's the whole reason why we're like, oh shit, we're gonna get 6 cuts in 2024, right?
Yeah.
I mean, he is solely the reason why. I mean, I'm trying to pull up some information, googling.
Yeah, no, he's not. Williams is vice chair. I thought he was one of the big wigs. But yeah, it's so a lot of the market's looking at this speech now. The warning I have for traders is it's scheduled my time 10 p.m., which is right on the start of the broker
late.
roll.
Yeah.
And that's the point where your spreads blow out and you can't trade. They switch off the machines, and it's a real messy time to be trading big headlines. So, be careful of that. If your platform suffer from the broker roll, you all know what that is. Be very careful.
For us here, it's happening at 6 p.m. Eastern, 3 p.m. Pacific, Dale, just so you're aware. And that it is, like Ryan says, it's during the dead hours, and it could get nutty. So if he turns super hawkish, if his speeches continue to be hawkish, which I think his last couple have kind of tilted that way, next thing you know, we're like, wait, are we even going to get a rate cut this year? And then next thing you know, you've got, moves really developing through Asia. So just heads up.
Yeah.
It's
a big risk point. Yeah.
Right. Yeah, it is. And I want to just clarify, just make sure today we don't have any data coming out that we should be paying attention to, but there are a lot of things happening. And I guess one of the last thing I should mention, and Dale, I'd love to get your thoughts here. The market drifted lower yesterday. We are continuing to make higher highs and higher lows. Let's not forget that. We have not only the 5,200 level that is left untouched at the S&P, but below that is this channel support that we've been, we're trying to accelerate these moves, but as long as we're above like 20 or 21, 51.75, 51.80 in the S&P, I wouldn't be too worried. But I do feel that this week we've just kind of drifted lower, but it's just a drift. It's not like what do Elliott wave people call it, Dale? Impulsive, right? Impulsive.
Yeah, no, it's
selling.
Yeah, it's
moves.
corrective. So
right,
I've changed my mind. I'm covering my Apple shorts this morning on the opening, looking for one more high. And I don't like the RSI reading at the last high or the way it sold off. So looks like we could get one more push. Apple probably collapse now, but I think if there's going to be one more high in the market, I own April puts, so time is also part of it. I don't want to give up any more time. It's only about 3 weeks left, so I'll book it, and then if we get new highs in the market, I'll see if it carries Apple, maybe back to 180 or so, and I'll lay them out again. So that's what I'm
Ryan,
doing.
what trade are you looking at? Because I'm going to tell everybody what I'm looking at today.
Yeah, I'm just going to manage what I've got. Euro dollar into 108. We're at 108.15. Another test of this 108, 107.90 level. So quick after the last one might spell trouble. If we break that, we're probably heading down 107.60s, maybe more. So keep an eye on that level again. The bounce looks pretty weak off that first test. Yeah, and just see what happens with this dollar yen at the moment. I know I'm going to be square by tonight, one way or another. I'm not going to sit in leave a position on overnight. I can tell you that through Asia. So
and Friday,
yeah,
U.S. markets are closed.
Yeah, and
Or
Thursday
that
afternoon.
big number for the big
Tomorrow
number.
afternoon, it's half day.
PCE. Yeah.
Yeah.
So
and,
the markets are going to be
Dollar-Mex
closed, and I haven't decided yet if we're going to be broadcasting the Face show through PCE. Dale, you're not obliged to do that. If we do it, it's going to be, it's going to kind of be on the it'll probably just be a few of us, but
Okay.
anyway, I haven't made that decision yet. I kind of wanted to see price action as we headed into the end of the week. Depends how shaken up things get. But I'm going to say this, that I think you guys should focus. And I sold some Aussie at 65.25 today, but I really want to add to the Aussie below 65 cents. We start breaking below 65 cents. I sold it as soon as I got up this morning, because they tried to bid it up a little bit. Yeah, we clear 65 cents. I think we trade to at least 64.50, and then maybe down to Dale's number around 63 and change, which I'll be adding all the way down. So anyway, there's a little freebies for those of you not in the ForexAnalytix community, but the rest of you should jump in. It's only $1 for 10 days, so jump in and come chat with us there, because we're literally there all day long talking about markets. And we've been missing K-Man the last few days. Hopefully he comes back tomorrow. He's dealing with some personal issues that he's trying to square away, right, Ryan?
Yeah, exactly.
Cool.
What are they? Kidding. Can you help me?
One thing I want to say, with all this intervention stuff, because this is a bank holiday weekend, both the Friday and the Monday, it would be a good time if the Ministry of Finance wanted to hit a low liquidity air pocket and get some bang for their buck.
Yeah.
So that's going to be a big risk for this weekend.
See, damn it, Ryan, you're going to make us all sit around on Good Friday when just all like sitting around waiting. So who did you want me to promote, Dale?
Patrick Kareem.
I will find him right now.
Maybe you could tell Steve to fix it so I could do it.
Yeah, I will, because it's it's funny you say that Zoom just kind of does whatever they want to do, and they Zoom is on their own program. Let me see here. I have
Patrick.
Let's see if that works for me. I just try to promote him, so
it works every time you do it. I don't see him moving over.
Yeah, he hasn't responded yet. So, hey, guys, gals, while we're doing this, I want to say thanks for hanging out with us every day. Make sure you're listening to Ryan and K-Man too when he comes back. Oh, here he comes. For the Flow Show, it's on during European hours over this time change, which I know you guys change your time in Europe and around the rest of the world this weekend. Congratulations, you finally caught up to us. I've been enjoying listening to Ryan's show, at least the last 10 minutes every morning when I get up at the 3 o'clock hour. So I won't be able to do that. But for those of you in Europe, Asia, and anywhere outside of the US, make sure you're listening to Ryan and K-Man on the Flow Show. It's free, and they prepare you and talk to you about like things that happened in the BOJ while the rest of us were sleeping. So thanks, Ryan. Thank you, Dale, as always. And Patrick should be here, so
hey, Ryan,
have a great interview.
He's here. Hey, Patrick, the times they are a changing. How are you, brother?
Hi Dale, hi Dale. Yeah,
All
yeah,
right.
I'm doing good. I can't believe how fast time flies, man, because
Yeah.
it's every 3 months that we catch up, and it's already another quarter bites the
Yeah.
dust.
But we finally had some resolution since you and I talked. Gold breaking out to new all-time
Yes.
highs. I know the gold silver ratio is still favoring
Yeah.
gold for a while, but the miners turned and put on a pretty good performance. So you got to be happy about that.
Yeah, there's still a lot of way to go, but gold's beating inflation. It's still stuttering versus the SPX. To get full tailwinds, the precious metals complex, silver, the miners, they need gold to really not just outperform on its own chart, not just outperform inflation, but it needs to really steal the capital flows away from the SPX. But
Right.
we're not quite there yet. The gold silver ratio is kind of getting me worried a little bit because I want silver to break
You
out.
have
I want to be
anything you
worried.
want to share, Patrick?
Yeah,
We
I'll
have a
share you.
blank screen.
Let me.
Okay, so it's bothering you because I know that for a real true precious metal bull market, I want to see the ratio going the other way.
That's right.
Right? Are you in that
Yes.
camp?
Well, you guys see my screen?
Yeah.
So yeah, but we got to be careful because back in the 2000s, the gold silver ratio, uh, sometimes it just went sideways, it went nowhere, and both gold and silver were going up. So the gold silver ratio plummeting is it's good for silver. That means you want to own silver instead of owning gold. But the gold silver ratio could still be going sideways and up,
And
and
they
gold and
both
silver
could
can
go
still
up.
be going up, but just silver won't
Right.
be outperforming. But in
Is
I
that
want
where
to
you
see
think we're
silver.
at?
Sorry,
Do you think that's what's happening here?
I'll show you. Show you some big charts, some big picture
That it
chart.
doesn't matter. Price is everything. If silver to me breaks out over
Yes. Well,
$26, that's
okay.
going to be a big deal.
Yeah. So let's do silver. So silver, remove
Oh, there you
drawings. Let
go.
me put it on the. Let's say we're close to quarterly. So let's do a quarterly chart. Remove my cloud. Okay. So here, silver for a whole for the just before this week, silver was above, but clearly above a breakout line on the quarterly chart. 1, 2, 3. It's a pretty nice, it's a zone, but it's a pretty nice breakout line here. It's above. The issue I have is it was more above. And how many trading days we have left there, Dale? Are the futures traded Friday?
Um,
Probably lightly, right?
CFDs, I don't think futures
Yeah.
will.
So we have today and tomorrow, but this is what I don't like is during the intra month, we were all the way like the wick was
Yeah.
crazy here. It was like if we get that breakout and then it would be also a horizontal line breakout from like a pull flag, that would have been epic. But now it's getting sold into.
Yeah.
I think the market's trying to make that close below that breakout line or at the very least and subdue it. Maybe maybe here this shorter term, less steep angled trend line here, probably morphing into existence. Let me remove that one. So maybe the market's trying to contain it, slow it down a little bit here. Yeah, maybe that's morphing into existence, right? You need 3 touch points. So maybe this is going to happen a little quarter down and then move up. But it's not convincing now. Like even if we do get the close where it is now for silver on the quarterly chart, I'm not. It's not what you want, right? Like you want convince. And
Yeah.
I'll go on the monthly also because it's a quarterly close, but it's also a monthly close.
Yeah.
And then the trend line is going to be a little higher on the quarterly, on the day. And look at that on the intra month,
Yeah.
on the
Right there.
monthly.
Yeah. Right
It
there.
was above during the month. It was
Yeah.
above. But look, the market came in and saying, you're not breaking out this month. And I'm pretty sure that here's a less steep one here morphing into existence. So it's not bearish. Somebody told me,
No.
Patrick, if silver doesn't break out this month, are you bearish? It doesn't work that way. It's right now, it's neutral. It's going sideways, higher lows, but it's not doing higher highs
Yeah.
yet. And for an
There's
upwards channel,
nothing bearish about it either.
No,
So,
exactly. You don't short this. Yeah,
yeah,
it's
yeah.
like it's just you don't do anything with it now.
I'm
There's
looking
nothing
at
to
like,
do.
do you have levels around, say, 2320? I have a lot of MAs that come in there. That's where I would be a buyer
Yes.
if we got to pull back.
Well, look, 23, this is the high volume node. So this is the volume per price. And the exact highest peak of volume is at 2023. So that's, if you're above
Okay.
that, that's support. If you're below
Okay.
that, that's resistance. So
Oh,
it's
interesting.
coiled and tight. Look, these are the patterns we dream of. It's
Yeah.
like coiled and tight above support. The only
Yeah.
thing people have to do now is just be patient and don't jump the gun. Just wait, guys, because this is going to be, you could do a whole bunch of measured moves. Like, I don't know, have fun with it. But
And I
after
talked
what,
to a guy, Patrick, who's in the physical market, and the public is so discouraged because, they're watching Bitcoin and the S&Ps, and they paid ridiculous spreads for physical metal. And then I talked to a mining analyst, and Fabi said that silver is the most hated metal out there.
yes,
So
well,
that's
that's what,
really bullish to me.
well, it's a bullish setup, but that's what a 4-year consolidation is going to do to you,
Yeah. Yeah.
right?
And watching everything else go up, and
Yes,
you've committed capital and it's doing nothing.
yes,
And you feel like, a clown.
yes, exactly. So,
Plus, they got
but
ripped off buying physical at 10% premium in and out. So they needed 20% to BE.
I know, yeah,
They were, the industry really sabotaged themselves by being greedy like that.
yeah, those
Anyway,
premiums, it's crazy. Like, that's why I own gold and silver, but as a stacker, but as a trader, there's no reason to be long silver now as a trader. There's like, there's the setup's there, guys. You just gotta be patient. You just gotta be patient. So that's kind of worrisome because I'll overlay here recessions on top of silver chart. And silver, like pretty much any metal. Hey, where's my recession? Okay, it's loading. Here. Silver likes to bottom in the abyss of recessions, like here, the GFC. See, silver was already recovering before the GFC. Here was
yeah,
bottoming in the 2000s. Here on the way down. You see these V shapes there that silver does. It's often here peaks and then goes down, bottoms in here a little bit, bottoms in the abyss of a recession. So I think here, this section here was the market was pricing in a good probability of a recession here. Whether officially or not they declared it, doesn't matter, right? Silver, the market was pricing it in. So as long as silver doesn't break out, I'm still worried that we could have some type of drop, right? You need silver to break out. Like, let's say here, sometimes I think I have a feeling we're close to like a 2000 scenario where we could move up. And then after that, the recession that everybody thought we're having here is probably going to be here, but from silver at a higher price point, right? And then
yeah,
the
I
50,
like that. Yeah,
yes,
maybe even in the 40s first.
yes, like wherever it goes, and even a 50% retracement, whatever, like a huge drop, you're still going to be now above this, right? Because that's going to be the 28
Yeah,
level is going to be support, right?
yeah.
So that's
Nice
the bull.
thought, man. I like it.
But
And
uh,
that's going to be another pullback to buy.
yes, well, at least not buy the bounce here, but at least wait for that pullback to end. And once it ends, then you get a beautiful pull flag, and
Yeah,
then that's what you play, right? You play the measured move out of that
yeah.
flag, like whether the flag could be long, could be short. That's why, guys, I tell people never jump the gun. Even if you're hitting support, it's supposed to bounce. It could bounce and just tumble for 6 months,
Well,
1 year.
that's
Who
what
knows?
stops are for.
Yes.
So I mean,
So
you
never.
could trade. You can attempt. I can attempt along at 2320 and risk 2275 to possibly catch this before the next move up. That'd be a pretty good break to buy. Um, you know, you can't get into the ring without expecting that you're going to get hit. So, you tactically probe markets and protect at the same time. Probe and protect. So, yeah, it's my style. I'll buy a break,
Yeah.
and I'll have a defined risk on the trade. I don't buy it and then say, well, takes out that support area, well, let's see what happens tomorrow.
No,
I've
yes.
done that. I've
Yeah.
done that. That's the road of destruction.
It's a road of destruction. Once you've realized you're entering a correction consolidation, that's when you got to step away. Or because look, let's say you're in an uptrend, you go up, it's going up, guys. It's fine, right? Let's look here in 2007. You're going up. It's great.
Yeah.
As soon as you start having a momentum breakdown, the momentum here, that's a distance from the 36 month moving average. As soon as it breaks down, you're not going up as fast as you used to. You're slowing down. So that means there's a correction happening. That moving average is catching up. It could happen in time and or price, right? It's either violent price correction and then the moving average catches up, or it's time. But this is opportunity cost. And as soon as you realize that, you got to step away, because look at this. Once you go
At
neutral,
least with part of it, take partial
yes,
profit.
yeah, sure. Take part of it, take all of it out. I don't mind. Take all of it. I'm never scared of, because people, they trick themselves. They say, oh, what if it goes up? I'm going to miss 10, 20%. Who cares? Because you locked in those gains. But in hindsight, you'll say, oh, let's say the price goes up. In hindsight, people say, I was wrong to exit. No, you weren't wrong. You had momentum breakdown. The price was halting. Yes, it could be a short consolidation. It could be a long one. You don't know. And in hindsight, you think you knew, but you didn't know. So this consolidation could have actually went down here, just like here in the 2008. Somebody here in 2008, let's say the measured move from this pull flag, let's say it got reached. And then after that, you have a momentum breakdown here. And then you say, oh, I'm going to hold on. I think it's going to be a short consolidation, right? You're drawing this bullish roadmap, right? You think it's going to break up. But look, this could also happen, because once you're neutral, you're one step closer to down. So when you're going up, before you go down, you have to go neutral first. And once you realize you're neutral, you have to decide now, because you're not up anymore and you're one step closer to going down. So from a statistical probability wise, while yes, on the longer term, you're an uptrend, there's opportunity cost, because you're probably going to go sideways. And if something bad happens, like the GFC or something like that, then you're down. Like, there's so many examples of this. Like,
hey, buddy, you know what? It's that dysfunctional psychology that you never have enough on when you're right.
Yes.
And you always have too much on when you're wrong.
Yes. Yes. And it's easy to fix, guys. Have a framework, know exactly what you're going to put on, and never feel bad if the price goes up and you exit. Never feel bad if you exit and the price goes down, or don't feel proud. Oh, I told you guys, I called the top. No, don't do that. That's an emotional trap, because the price could have went up. Do you want to get judged and say you were wrong to exit because the price went up after you got out? No, you want to be judged because you respected your trading framework. That's the only way to survive long-term in the trading world.
That's a pearl.
Did I respect my trading framework? Yes. Okay, I understand. If your framework needs work, you work on it for the next trade. Okay, maybe yes, my distance from moving average, I was too greedy, but fix it for the next trade. That trade, if you executed it and follow your rules, there's zero thing wrong with it, no matter what happens after, no matter what happens. And people have a hard time with that. So look, sometimes we exited Cameco at the top. But it just happened there. I'm not going to go and flaunt, oh, I called the top. No, it just happened that we had like, let's say I put Cameco for the fun of it there. I'll just show you what.
Yeah, I like it. I saw that top.
Yeah. So
not much of a top.
Let's say here. So I don't know. Here we had distance from moving average. It was overheating. The momentum broke down on the distance from MA. So here you had a whole bunch of reasons to exit. So even if the price did keep going up and now it's going sideways, I don't know. It could consolidate for 2 months, 3 months. Maybe it's just going to rocket upwards and that's it.
Right.
But I don't care what happened after, because
that's great.
I rolled my pull flag the way I wanted to ride it, right? I had a beautiful pull flag and I was stretched from the moving average. Why stick around? So never feel bad, guys. If you exit and the price still goes up, and never inflate your head saying, "Oh, you're the best trader because you called." It just happened because we'll only know in hindsight, right, whether that was a top or not. And who cares? Like, I never play the bottoms and I never short the tops, right? What I play is the breakout off a base. You see, because this is a thing, Dale. To have an uptrend, for you to make money, the price has to go up. For the price to go up in a probabilistic high manner, it has to be an uptrend. To have an uptrend, you need higher lows and higher highs. The only place you will see higher lows and higher highs is after a horizontal line breakout, because the previous high is flat. If you do a higher high above it right here, that implies you have higher lows and you're starting to build an uptrend. That's what you should be looking for. People trying to catch bottoms. The problem is
a lot of people would have had trouble buying it. They would said, "Oh, I missed it on the breakout day when it was
goodness,
just
no.
beginning."
It's just
I
beginning.
used to think like that. It's hard to reach when you wanted to be long from lower, but you didn't do it. You said you'd wait for confirmation. You get the confirmation. You go, I'll wait for a pullback. Come on, who hasn't? Everyone in here, raise your hand if you've thought that. Give me a Y. Give me Y right now. Anyway, I know I have. And what a big mistake. So, have we learned? Anyway, that's why we do this to get better. We have to learn from our mental illnesses we have when it comes to trading. Okay, we have them. We bring them into, Patrick, our childhood, we bring into trading.
Yes.
Things that we learned, scarcity, not respecting the value of money, all kinds of stuff. Or, you know what? Some people go in wanting to be punished because they don't deserve they don't deserve to be happy. So what a great way to punish yourself is to be a lousy trader.
Humans are not built to be traders. We're not emotionally built to be great poker players. We're not built to do these great things. We're emotional. We're crowd thinkers. We seek bias confirmation from the crowd, from CNBC. But goodness, think about it, guys. If everybody around you is confirming your bias, who's left to buy? It's done.
I'm becoming a cyborg this year, Patrick. I'm going to have some AI implanted into my head that completely blocks normal human emotions in the market.
That's what you need. You need to have a robust framework, and you need to find a partner. I'm lucky I got Kevin that could balance you. I always thought that a pair of traders would always be better than a solo guy, unless a solo guy is like on the autistic spectrum or is like says a robot or something and he's able to focus. But I always thought that if you're two and you make sure that the other guy, you keep him in check, right? The other guy wants to go long, whatever, Bitcoin. The other guy says, well, look, we're stretched from the moving average. We're stretched here. So if one gets the FOMO, because we're humans, we're always like it's always after the price. Oh, Bitcoin's up 15% today. Oh, and then I missed it. And then you want to jump in, but you have to be level-headed, go back to your framework and always say, am I stretched? Always look at the moving average, guys. If I could give you a clue and show you when the low risk entries are for assets, it's here. It's when you're not stretched from the moving average here. It's not up here. Chemical could do no wrong in 2022 there. No wrong. Even here on this huge move up, Chemical could do no wrong there. So if you're stretched from the moving average, do the TA on it. People say, oh, you can't do TA on distance from moving average. Of course you can. This will tell you. Name me what do you want me to look at? Any instrument there.
Let's look at the miners. And I want to ask you, I've said this about you and Kevin, what you were just talking about. Here's the new math. 1 + 1, if it's symbiotic, like we have here in F.A.C.E with some great traders. 1 + 1 = 11.
That's right. Get more.
Okay? Yeah, maybe 11,000. Let me ask you this. You brought up Bitcoin. Have you taken any heat from being bearish Bitcoin?
I'm not bearish Bitcoin. Let's define it by time frame. So
I remember long term. Kevin especially was.
Well, I'm not. Bitcoin's above the 12-month moving average. It's above the 3-year moving average. It's above the wall here. It's above a whole bunch of things. So you don't, on that time frame, you don't short what you think is going to be a top. you exit your longs if you think you're getting stretched, like we did with Cameco, etc. So Bitcoin right now is heading into a wall of distance from moving average, right? Here, the reaction here, the blow off top, here, support, echo bubble, support. So that's going to be resistance. It still has, now it's at 95% above its moving average. There's 125% where it could slow down. So it probably has another 30%. It could go up above the 3-year moving average, which is the red line here. So let's do my
Do you think
distance.
Bitcoin's going to continue to outperform gold?
Well, okay. So to answer that question, all you have to do is,
The ratio chart.
yes, exactly. So right now it's an uptrend. You can't, but even look, Bitcoin's an extension of the SPX. So if I tell you that I don't like the fact that gold is, while it's nominally doing new highs, is not outperforming the SPX, it goes hand in hand. Just Bitcoin's going to amplify that, right? So as long as that's in an uptrend, that it's above the 12-month moving average, above the 3-year moving average, then if you force my hand to hold gold or Bitcoin as a trade, I would have to hold Bitcoin just because it's in an uptrend. It's outperforming whatever gold does, whether gold's going down or go up, Bitcoin's in an uptrend, right? So is there a low risk entry today to do that swap? No, because now, like I showed you, you're starting to get stretched now. The low risk entry, guys, where is it? It's when you're here, when you're not
Well, I'm
stretched.
looking at 40,000. How about a pullback to 40?
For the for the Bitcoin.
Yeah.
Yeah, it's, look, you got to look at the SPX now, because that's Bitcoin will, I was doing a study, I didn't publish it yet, but Bitcoin tops practically all
Earlier?
its important tops are 6 months to 12 to 24 months before the SPX tops. So you'll have these
Oh,
crazy
wow.
tops in Bitcoin, and then the SPX is going to keep crushing higher. So
that's a good thing to know.
yes, I could,
Great
I'll show
study.
you. I was working on it. So let's say put SPX here.
You know what? You're an animal.
Well, every time I have a question, every time I have
You can answer it.
I need an answer, but an objective answer based on chart data, right? I can't just say, oh, I think it's going to do that. I need empirical evidence. I have to count the number of times something happens, and not just look for that one time it happened and say, oh, it does that. You have to count, and then if it does it like 7 times out of 10, then I know it's a 70% probability.
Yeah.
So I'm just going to put my Bitcoin new price scale log.
Maybe we could, after that, maybe wrap it with your view on miners, because I saw a tweet of yours or a video, and I had GDX on the verge of a breakdown if it closed under 24. I was looking for about 78.6 was 24.80. And we've had a nice rally in the miners.
Yeah.
I'm looking for a pullback.
Reporting peak in Bitcoin. Look at look how
at that.
the SPX grinded. The peak in Bitcoin here. SPX went down a little bit, but kept grinding higher and kept going up, while Bitcoin went sideways all the way here. SPX was much higher here. Here, the top in 2021. Look what the SPX did while Bitcoin went sideways and down there. SPX kept going up.
Yeah.
So I'm not scared too much for the SPX. As long as Bitcoin's going up and the capital flows are going to that more speculative asset class, then there's not that much worry for the SPX. Now, they could probably maybe fall together, but every time Bitcoin's probably going to do a blow off top before the market does. The miners, yeah, let's look at the miners. Remove drawings. Okay, so the miners,
they haven't done it yet.
There's nothing happening here until the thing is, the miners, so much damage done.
Yeah.
Remove indicators. Let's refresh that here. It's what I like is that here's the momentum. The distance from the 3-year moving average here's a breakdown. So now it goes down. Now it's resetting, but it's below the 3-year moving average. There's a massive wall probably right here. That I would probably get interested in. Let me stretch that.
Why do you use ASA?
Because I have data going back all the way to 1968.
Okay.
But they're practically all the same. Look, I'll tell you, there's some miners that look great, like Wheaton, Dundee. There's a whole bunch of them that
Endeavor, Fortuna. The
Yeah,
silver shares.
there's some that are doing better than the, but as an
40%
aggregate,
moves off the lows.
but I'm talking about like stuff there that's like London Gold, London stuff that's like at all-time highs are London Gold, New Pain. Is that the one? Here, I'll just show you London Gold there. Oh, candles.
Toronto.
Why is that my internet that's slow? Goodness. There's a chart. See, look at that. Like that's a miner there.
Hamsters start pedaling faster.
Look at that thing. So you
Yeah.
see, there's some good looking charts out there,
Yeah.
but as an aggregate as a whole, they're terrible. So below 16,
Yeah.
I don't even talk to me about miners because they are underperform and over. They're close to a massive breakdown. Goodness, that line is crazy, man. If
Yeah.
that line falls,
yeah.
that line falls, it's game over. I'll show. And the miners, they're just terrible. Look, I'll price them in gold.
Oh yeah,
Like
they really.
if you look at that chart, there's absolutely no reason to ever buy miners. Just hold gold. Look, this is since 1968, the miners have just been destroyed versus gold, just destroyed. And now look, I think that's a breakdown there. Look at that, another breakdown. Goodness, very close.
Generational low coming
found
up.
Support. Found
Yeah.
support.
All right.
It's not, but this is not where you buy. This is not.
You want to buy it when it breaks out.
Of course, because like I said, these are bear market rallies. The true move, the true move is going to be much higher. It's going to be like, you go along miners, goodness, like up here somewhere there.
Yeah.
As an aggregate, as a whole, if you want, there's 100% there's outperformers there. I'll show you them. There's like Whedon, like those charts are much better looking, right? Whedon's like close to all-time highs. Look at that thing. It's like a head and shoulders. It's looking like the gold chart. There's some miners. Why play JDX, Huey, AZA, and all that stuff? They're getting dragged down by all the, I don't want to say the crap there, but insert like all that. While there's some miners that are just outperformers. Newmont's terrible.
Yeah,
like,
Newmont.
Goodness. People say, what, like, why would you play this thing? It's like, it's in a downtrend. Like, I'll do you this trick. I'll flip the chart. I'll invert the scale. It's in a beautiful uptrend, Newmont, but with the scale inverted. So that's a good trick to remove bias. It's in an uptrend above the 12-month, above the 3-year, above a whole bunch of stuff, above the resistance. It's got it all. So why would you even try to cherry pick a bottom here? It's suicide.
I really enjoyed talking to you again, buddy. 3 months will fly again. I'll tell you, I want people to know where to find two of the hardest working technicians I know with very good insights. If this is, your thing, Patrick and Kevin at Bad Charts One. That's where you could find Patrick. You take questions that people send you DMs on X, don't you?
Yeah, anybody, my DMs are open. I don't block anybody there. Trolls are welcome. It's no problem.
All right. You really have a great attitude. You want to show your website?
Yeah, show it. Sure. Yeah, why not?
Yeah.
Let me show you the website, guys, a little bit. North Star. So yeah, I have a website with Kevin. Now you can see, you're seeing the inside. I'm logged in now. So we have a whole bunch. We do crazy amount of posts, video requests, the whole shebang there. And we have currently we have a 50% discount deal there for spring break. But look, anyways, I'm not here to pitch the website there, just to share with your audience there. It's great enough for us there. But when people want actionable trades and more of our attention, that's a problem with social media. I do take DMs and I try to respond to people on the Twitter, but I'll always prioritize and give the actionable information to our members, right? That's one of the reasons Kevin and we started the website, was because we were getting overridden by DMs and stuff on social media. We said we have to
filter it.
We had to, and like we're super cheap. We're probably, some people, our members, they tell us, man, it's like it could be 10 times as much for the amount of content and stuff we offer there. It's like, it's crazy. We're super cheap, but it's just that's what it is. Kevin and I, we didn't want to, we just wanted to create a database of all our work in one place. And that's why we created North Star bat charts.
Well, you did people a favor to be able to glean your work, buddy. So give Kevin my best regards. We've been talking for a few years here, Patrick. So I
Yeah.
want to thank you for coming in every quarter or so and edifying the F.A.C.E community. Thank you for trading water, brother. Yeah.
I learn every time I talk to you, Dale. And to anybody there, we keep learning every day, and that's the goal.
Okay. Patrick Kareem,
All right.
everybody.
Take care,
Bad
guys.
Charts 1. Check them out. Thanks, bro.
Ciao.
I'll get a hold of you on Twitter. You'll answer my DM, right? To set up the next day.
Always.
All right, bro. All
Bye.
right, so that's it, everyone. You joined the team in 11 minutes. People are thanking you, Patrick. And the team will be ready in 10 minutes now on the Morning Edge. Don't just count your bars and coins and shares. Count your blessings. Adios.